How much are you worth?
I have no idea. How much do you want?
No, I just want to know what you're worth. Over 10 million?
Oh, my, yes.
Why are you doing it? How much better can you eat? What can you buy that you can't already afford?
The future, Mr. Gitz. The future.
Welcome to Money Unplugged. I'm Chris Hill. Thanks for being here. If you click the follow button on your podcast app, it takes 5 seconds. Give the show a follow. That way you won't miss an episode. And if you really like the show, give it a rating or review on your podcast app. It's actually one of the ways that other people discover the show. And if it's all the same to you, I'd like more people to listen to these conversations. I think they're fun. I think they're interesting. I think the guests are fantastic. But, you know, I'm a little biased. Today on the show, I talk with Matt Argersinger. He is a senior investing analyst at the Motley Fool. He's one of the smartest investors I know. And we actually do spend some time on this episode talking specifically about stock investing strategies. And this has happened a couple of times over the past year on this show. Another example of when I'm talking with someone that I've known for a long time, and I've known Matt for close to 20 years. And I feel like I know someone's personal history, and right at the start, as you will hear, it turns out I actually don't know this person as well as I thought they did. So let's get into it with Matt Argersinger. You grew up on the North Shore, right?
Actually, I didn't, Chris. I grew up on, believe it or not, my dad was in the Army. So he was from Massachusetts, but I grew up a lot on military bases, actually, around the world.
So were you moving just every 2, 3, 4 years?
We would move on average every 2 years. So that was, growing up, you kind of make friends, and sometimes it was a bummer to leave those friends, but you'd make new friends. And Army brats will tell you, and I think they've done some studies, but we tend to be pretty resilient. We tend to make friends easy and have good relationships. And I have friends, really lifelong friends that I met in Germany when I was in high school, for example. And they're some of my best friends. And so it was an interesting childhood. And I look back on it pretty fondly because we did a lot of travel, especially when we were stationed in Germany and then Italy for a time. You're in proximity to so many amazing things. Now, you don't really appreciate that when you're, 10 years old, as you might later on. But it was a really great experience to travel and see all that and learn German and do all things that you do if you're living abroad.
You're absolutely right about the resiliency. Anyone I know who has had that kind of life growing up, it's clearly a very formative experience. It's not without its challenges, but yeah, the resiliency is absolutely there. All of that as background, what is the earliest memory you have when it comes to money?
Growing up on military bases, what you realize, especially Army bases, that was what I was familiar with growing up was, Army base in the 80s and early 90s. Basically, you had the Post Exchange, the PX as it was called, and that was kind of the center of commerce. And it was kind of like a shrunken down Walmart. Pretty much had everything you could need. And then it seemed like always adjacent or nearby the PX was a Burger King, a Sbarro's pizza joint, and then an arcade. And as you know, if you're a kid in the 80s or 90s, the arcade was the spot.
Oh, yeah.
So what I remember, I had an allowance from my parents, which amounted to, $1 or $2 a week. I can't really remember. And really, literally all of that would go to the arcade. And, as you realize, when you show up with $1 at the arcade, that only lasts you about 5 minutes. And so I think my first impression of money was I would see certain kids, older kids come in with rolls of quarters. Not only with rolls of quarters that they could play for hours, but they'd have candy or ice cream or pizza from Sbarro's. And I'm like, man, how are they getting all this stuff? How do they have rolls of quarters? And so I remember I had conversations with my dad, and he said, well, those kids, I'm sure their parents were giving it to them, but he didn't tell me that. He said, well, those kids are, they're doing chores, or maybe they have a part-time job, they're making money, and hey, you could do that too. So my earliest, I guess, desire or demand for money was like, how can I get more money to spend more money at the arcade? And eventually that turned into comic books and other things. But I was definitely I was definitely a spender when I was a kid. Like, how could I get more money just to spend on Rolling Thunder and Street Fighter at the arcade or on comic books, off the newsstand at the PX. That was my goal with money growing up.
Oh, I think that's a common mindset for kids. It's not, how can I save this? Unless it's, I'm going to save up for this one big purchase I want to make. It's very transactional. I want to get money so as quickly as possible, I can spend it on this thing I like.
Right. And, inevitably you dump 20, even if you have 20 quarters, man, you're never getting through any of those games. And so, what a great business. I mean, that was my first, probably experience with business was like, how great is an arcade? Man, I want to own an arcade when I grow up.
So what was the first job that you had as a kid? I mean, that can cut both ways. That can be the chores around the house to get some money to go to the arcade. But I'm primarily thinking of the first, quote unquote, real job.
Right. So I definitely upped my game at home with the chores. But for a while, I had a paper route. I had 2 paper routes growing up at various different places. I had a lawn mowing business for a while where I had like 5 or 6 customers in the neighborhood whose lawn I'd mow, for like $5 or $10. I can't remember what it was.
And where are you living at this point?
So this would be mostly in Arizona, because there's a base in Arizona called Fort Huachuca, still there, right on the Mexican border. And so about an hour south of Tucson. If you need a geographic location. I mean, I loved it, actually. I loved living there. I loved being in the desert. It was kind of cool. But yeah, so I had various kind of jobs, either a paper route or mowing the lawn. Eventually, I got the dream job, Chris, if you're on a military base, is you become a bagger at the commissary because you work for tips. That's all you worked for was tips. And you would have some military wives come in, and you're packing like a good 7 or 8 bags worth of groceries, taking it to their car, and sometimes you get it $10 out of that. And so, that was huge. And so if you do 3 or 4 baggings, say an hour, you're not getting $10 every time, but it's at the time way more than a hourly job or, a minimum wage job, I should say. So those were my early childhood jobs that helped me finally make some decent amount of savings.
Yeah, at some point, if you're doing it right, you're making enough money that, 1, you're busy with your job, which leads to, 2, you don't have as much time to spend it at the arcade.
Exactly. So I was finally saving some money, and I remember there was, I think one summer I managed to save $500, which probably as an 11 or 12-year-old at the time was pretty awesome. And that is when I remember my dad first talking to me about stocks. He was a little younger than that. And I said, oh, well, wait a second. So you could buy something that could be worth more tomorrow. And of course, like all dads at the time, he would show me the Barron's or the Wall Street Journal tables of the stock charts, and they're all fractions at the time. But, it'd say, look, this stock, he'd make something up. Like, this IBM was trading for 40.5 a year ago, and now it's 54 3/4 or 54 3/8. And I did the early arithmetic in my head, and I said, that's extraordinary. What am I doing? What am I doing blowing this money on arcade games and comic books? I got to get into this stock game. And I remember the first stock I bought. It's not the stock I wanted to buy. So I wanted to buy, as a computer game aficionado, there was a company called Sierra Online, which made really great games like King's Quest, Police Quest. If anyone grew up in the 80s or 90s, they might remember those games. They were awesome games. I used to play those games for hours. I'd play them over and over again. And I realized that Sierra was a public company. And I was like, oh my God, I've got to invest in this company. And I remember I pitched my parents on it. And they turned it down. They said, I think, and we were actually living in Massachusetts at the time, because my dad did a stint where he was studying at the JFK School of Government at Harvard for a little over a year. And they said, no, you should invest in this company called Wang Laboratories. And I know you'll know this, Chris.
Oh, yeah.
Which was this huge, at the time, a huge computer company, mostly in kind of commercial computing, but they said, no, this is probably the company you should invest in. And I don't remember honestly why. And so I said, okay, well, cool. I don't know anything about stocks. My dad's a genius. I'm gonna plunk this $500 down in Wang Laboratories. And within 2 years, Wang Laboratories was bankrupt. It was the CEO, I think, died. The founder CEO died, and they had made some poor investments or poor acquisitions. I remember I looked back on it a long time ago and figured it out, but that stock went to zero. And you would think, wow, my first stock I ever bought with this money, this hard-earned savings, and I watched it go to zero. I mean, I remember flipping through the Wall Street Journal every week, just check on the price at least once a week, and I'd see the price going down and again, down. And of course, my dad was like, "No, don't worry, you just got to buy and hold." Good, generally good advice. That did not work out for Wang Laboratories. It went to zero, and so then I realized, okay, I'm not deterred. I got to figure this stock investing game out because obviously I'm not good at it. And so that's when I kind of started reading about it. This was now in high school and eventually in college. I read all of Peter Lynch's books, well, his 2 books at the time, One Up on Wall Street and Beating the Street, which were awesome, formative books. Read Warren Buffett's biography at the time, the Roger Lowenstein book, which was fantastic. So I started educating myself a little bit about stocks. And then so by the time I made my next investment, this was in college. It's a company I know you'll be very familiar with. It was Boston Beer Company, ticker SAM, still around, yes. Sam Adams fame. And it was because I remember just in college, anytime my buddies and I wanted to go out to drink, it was like you'd go, and if you wanted to go up from Bud Light or Miller or something like that, it was either Yuengling, which I think at the time was like $8.99 a 6-pack, or if you really stepped up, you go to Sam Adams, which was like, God forbid, like $11 or $12 a 6-pack. And we almost never went to the Sam Adams because it's too expensive. I mean, $2, I can get Yuengling for $2 or $3 less. So I was like, in my mind, I was like, Sam Adams must be doing something right. I love the founder of the company, and so that was my first real stock that I bought as an adult was Boston Beer Company, and that actually worked out pretty well.
Absolutely, it worked out. Let me just defend your parents slightly in this regard, that at the time they were right about the future of computers.
They were.
Personal computing is becoming, so they're right about the overall trend. And living in Massachusetts, it's hard to overstate how much Wang Laboratories was in the news, in the consciousness, promoted to the point where, and I know you'll know this, and I'm sure at least some of the listeners will know this, that there is still in downtown Boston a performance venue with amazing acoustics that was for a very long time the Wang Center.
Yes.
And even though the company is gone, the founder is gone, like, everybody still refers to it as the Wang Center. I don't even know what the name is now, but everyone still refers to it as the Wang Center.
That's right. So it was, and they employed tens of thousands of people. Yeah, as you said, it was a Massachusetts blue chip for sure.
So let's go to college then. You're at Brandeis University.
Right.
Degree in economics?
So I did a double degree in economics and politics. And that was always funny to me. So most colleges, liberal arts schools,
it's funny to me as well. Unpack that, please.
Yeah, right. They have you can major in government, which is what most liberal arts schools have. But for whatever reason, Brandeis had called it politics, and I was always confused about that at the time. But in hindsight, especially with today, I look back and I'm like, that was the right way to call what we learned in that subject. And so, yeah, economics and government/politics. And I tried really, really hard to do a minor in theater. I got close, but man, it was just such a mind split to try to do that with so many additional classes. I just couldn't fit it in. So I was the guy who took you would average 4 courses a semester. I was the guy who did 5.5, which was the max they would let you take almost every semester. I just like to try a lot of different things.
Did one precede the other? Or did you start off, first or second year in college, gravitating towards economics, and then you added in the politics, or vice versa?
I did because, yes, I wanted to do numbers, and economics was the closest thing I could get to the stock market / investing, even though it's completely different, right? But so during the course of that, there were other classes like investor relations or history, civics history, things like that I really wanted to take as well, that I just got interested in. And so eventually, you accumulate enough classes. By the time I'm a junior or senior, I'm like, okay, if I take 2 more courses, I can actually get enough to be a major. So I kind of backed into the politics one. But economics was definitely the core focus. I love it's a dismal science, but it has what I think are the closest answers to some of the big questions that I had about how the world works, about how our American source of, our core, the capitalist process or system that we have in the country, how it works. So that was always a curiosity to me. And so economics did a decent job of answering a lot of those questions that I had.
Do I have the timing on this right, that you started your MBA program at Brandeis while you were still an undergraduate?
So they had this program at the time, and I don't know if they still do, but if you started taking graduate level classes starting your junior year and then your senior year, they would let you do one additional year to get a master's, and it was a master's in international finance. So it wasn't an MBA, but it was a master's in a subject that I was really interested in, finance. And so I got to take some upper level accounting classes, econometrics. There was a class on bonds. And so it was just subject matter that I loved. And I started taking the courses, and then, you kind of get talked into by some of your professors, like, hey, you should spend another year. That way you're not doing 2 years for a master's, just 1 year. And so I discussed it with my parents, and they mostly agreed. They said, okay, yeah, go for that. Get your master's now. And, at the time, it was, I had studied abroad, and it was kind of the 9/11 had happened. And so, the economy was not in great shape. Anyway, so take 1 more year, get your master's, and then see what the job market looks like after that.
And what did you either think you were going to do or hope you were going to do?
I had never thought of myself being like a Wall Street person or a Wall Street guy. So a lot of my classmates were going that route. I thought I wanted to do more policy stuff with economics. And so I was looking at a lot of, nonprofit or kind of semi-governmental organizations. And gosh, I ended up at the federal government, the U.S. Bureau of Economic Analysis, BEA as it's often called, and which does a lot of the statistical measures in the economy, GDP, productivity, some inflation measures. And so that was kind of my first stint out of college, was working at BEA.
Jobs report? Were you one of the people working on the monthly jobs report?
I was not. So that was BLS, which is like BEA's
yes,
sister.
Of course.
Right. No, I was not in the, that tends to be the more incendiary part of the statistics. No one used to care really about GDP. That's the big BEA report that comes out, so.
Before you and your wife got married, how much did the two of you talk about money?
Quite a bit. Well, I guess we'll say this. When I met Jean, she was kind of curious about investing. And I, of course, loved talking about investing. So at some point, I think I remember she was asking whether or not she should open an IRA. And I was like, I was like, oh, I can't. Awesome. Yes, let's talk about this. And so that was, I remember I helped her open her first IRA, and she made an investment or two. And, and that was exciting. And I realized that, oh yeah, we're definitely aligned on the whole idea of saving and investing and trying to earn, a great return on your money. And so I felt we were aligned pretty early on. And it took a while for us to get married. I think I met her in 2005. This goes back to my theater background in college, but we met doing a play in Alexandria, Virginia. We both auditioned for it. And I remember I met her at the audition. And I went home that night thinking, oh God, I felt pretty confident I had gotten a role in the play, and I was praying that she did as well. And of course, when we had the first read through a week later, she showed up. I was like, yes. But
what was the play?
Biloxi Blues.
Nice, classic.
Yeah. And so I played Eugene Jerome, the Matthew Broderick role, and she was Daisy Hannigan, the female lead. And so that was awesome. And I ended up doing some more shows. She had to leave DC for a while to get some work. We weren't dating at the time. She came back in 2006. We kind of reconnected, and then got married in 2009. So a few years later.
Nice. It was meant to be. Do you send a note to the director every year on your anniversary?
No, but we're really good friends with her roommate at the time, and her roommate at the time was the one who saw the ad that there were auditions for the show. They were both roommates in Alexandria at the time, and her roommate said, "Oh, Gene, you used to do theater. Look, there's this audition at this little theater of Alexandria. You should go check it out." So from that, so I have her roommate to thank, which we still spend time with. We're good friends with them. So I occasionally will thank her and thanks for sending Gene to the audition.
If you're an investor like me, you know that feeling that you get after the stock market closes and you start thinking, hold on, what just happened? I was busy. And I get it. I'm right there with you. You know, you're busy with work and life. You're not watching the stock market closely, but you do want to get caught up on what happened. And that's why I read Brew Markets. It's the daily post-market email from Morning Brew. It hits my inbox right after the closing bell, tells me not just what happened on Wall Street, but what I can actually do with it. And I love it because it cuts through all the noise with clear, timely insight on the biggest stories of the day that are moving stocks, whether it's AI or earnings or tariffs. And it's all written by people who know the markets. And it's free. It's free. Just go to brewmarkets.com/money to sign up. There's a ton of stock market coverage out there, and a lot of it is either too late or too shallow or too boring. Brew Markets is timely, free, genuinely useful, and it's written with Morning Brew's signature sense of humor, the kind that makes a dense market day just a little bit easier to digest. So if you want a smarter wrap-up of the day in the markets, one that respects your time and sharpens your thinking, sign up for Brew Markets. It's a must-read, and it's free. Just go to brewmarkets.com/money and sign up today. All right, let's get back to Matt. All right, let's go to the speed round. What is a thing you have bought that makes you happy?
So not too long ago, I splurged a little bit, Chris, big time actually, and I bought a Superman #1 comic book.
Whoa!
An original copy. Yes, it came up for auction, and I did not expect to win it. And I put in what I thought was a pretty reasonable bid, probably a little bit beyond what I wanted to pay, and I ended up winning it. And now it's a low grade copy. Let's be serious, so it's nothing like, just to give you context, there was a Superman #1, a 9.0 grade, which is the record grade, that sold for $9.1 million last November. My Superman #1 is not a 9.0. Let's just put it that way. But this was kind of a dream for me because when I was growing up and I was collecting comic books, sometimes you go to a comic book shop and you would see like the Amazing Spider-Man #1 on the wall for, at the time, several $1,000s, which almost looks funny today because you can't find an Amazing Spider-Man #1 for less than 6 figures nowadays usually. And I dreamed as a kid, I was like, one day I'm going to have enough money. I'm going to stop spending money on all these games and I'm going to, buy me an Amazing Spider-Man #1. But so here I am, 30 years later, and I had some discretionary money available, and I said, and this Superman #1 came up, and I got it. So and it's funny. It's a book in a plastic case, but I take it out every once in a while. I admire it. I look at it. It makes me happy. My son loves looking at it. He's probably going to get it someday. It'll be in our household forever. And so that's a recent purchase.
Have you ever made a purchase you regret, and sometimes you still think about it?
Yes. So one of the things that Gene and I got into right around the time we got married is we started buying and kind of renovating rental properties in DC. I think I've told you these stories, and so that was a big part of kind of our 30s was renovating and renting out rental properties in DC. It worked out great. It was kind of part of our investing plan. The last rental property we bought, I think we stretched a little for it, and it was a bigger property. And while I think financially it's going to work out, it's just caused so many problems. It's an old house. We've replaced the roof twice already. We've replaced the HVAC system twice already. And this is only in the last 12 years. We continue to find problems. And if I could go back in time, we would have sold it 4 or 5 years ago when interest rates were lower and it was pre-COVID and DC was a different place. And now we're kind of stuck with this place. That's, and yeah, I think about it almost every day, and we're doing our best to kind of get it ready for market. But I think that's one where if I could go back in time, might have skipped that one.
Yeah. The last thing you splurged on just for yourself, is it the Superman #1 or is there something more recent?
Superman 1 would answer that as well, but I kind of consider that our family. It is a little bit of like an investment, and I know my son's going to get it someday. Well, recently this year, just a few weeks ago, went to the Super Bowl, and I had promised myself, and I know you'll agree with me, I'm going to lose about a bunch of your audience now because we're both New England Patriots fans, but I had promised myself, if the Patriots are ever back in the Super Bowl, I'm going to go. Now, I didn't think they'd get back to the Super Bowl so fast. After
None of us did.
era. So it was amazing. What happened this year was extraordinary. And so when I knew they were going to the Super Bowl, they beat Denver. I talked to my good buddy who's from Massachusetts, who's a diehard New England Patriots fan, and we said, we got to do this. And so I talked to Gene. I said, hey, I'm going to spend a little money here. I'm going to go to the Super Bowl with Ara, and I got to do it. And she totally understood. So I guess and I love the experience. Now, the game wasn't great for the Patriots, as we know, but the experience was awesome. And I look back on it with such fondness. It was a great trip. And I can't wait to take my son back someday. If the Patriots would ever make it again, which who knows when that'll be.
Fingers crossed.
So, yeah.
What is something about money that you wish you knew earlier in life?
It's a tough one. And apologies to Robert Brokamp, who I know you've had on the show, who's our Motley Fool retirement expert. Fantastic guy. I think I put too much money, or I was too aggressive putting money in retirement accounts early on. Now, I know that's kind of counterintuitive, but I think I was so, Gene and I early on, maximizing our IRA investments every year, maximizing our 401k investments every year, making sure, you get the most to get the full tax deduction. And I'm in a situation now where I'm kind of in my 40s, and I almost wish I didn't have as much now in retirement accounts. I kind of wish I had more today, especially everything that my son is doing. He's doing a lot of things, and I want to spend on that, and I want to spend more on trips that we can take and kind of life experiences now. And so I don't think this is good advice for most people, but I would say there's something to having discretionary income, after-tax money in your pocket right now that you can spend, on experiences or things you want to do before you're too old, or before it becomes hard, or before family obligations take over. And so I think if I could do one thing differently, I would still put a lot of money away in retirement accounts. I think I would have just not put as much, and having more money today, and rather than waiting until 59 and a half or whenever to start withdrawing money from retirement accounts. I wish I had more today.
I want to pause for 1 second and get your input on something, because among your areas of expertise as an investor, I consider you to be an expert in dividend investing. And when I think about the things that I wish I knew earlier about money, it's a long list. But one of them is, I actually got this question recently when I was talking to some college students. And the question was basically like, if you were our age, how would you invest, differently than, the way you might have when you were in your 20s. And one of basically what I talked about was dividend investing, and how stocks that pay a dividend, and I feel somewhat justified in the way that I did this, because, and this is what I want your input on. I feel like for a very long time, there was a stigma almost on stocks that pay a dividend. It was like, if you were a growth stock, the last thing in the world you wanted to do, or a growth company, the last thing in the world you wanted to do was pay a dividend, because it just sort of signaled, we're out of ideas. We don't have any more innovations. We're just going to give this money back to shareholders. I feel like when Apple paid a dividend in 2012, I feel like that was like the veil being lifted, or really the stigma, to the extent that there was one, on dividend-paying companies being eased. Is that, and you know more about this than I do, is that your thinking as well? That like Apple paying a dividend in because this was another thing I said, you cannot overstate how much it was part of the investing discourse on Bloomberg, on CNBC, on podcasts. The whole, is Apple going to pay a dividend? They had this huge cash balance, and it was we spent like a year and a half and when I say we, I mean just financial media in general, like, oh my God, are they going to do it? And then they did it, and the world did it. It didn't end. The world didn't end. Right. But is that your memory as well?
It is my memory, and I just remember all the sort of misconceptions about how, oh, this is the end of Apple, their growth's over. The only reason they're paying dividend is because they don't have any better places to invest their hoard of cash. And if you look at Apple's return since they initiated that dividend, it's been fantastic. I mean, Warren Buffett started buying the stock around the same time or shortly after they initiated the dividend, right? And that speaks to a larger stigma against dividend stocks, which is a lot of people just think, well, I don't want to invest in dividend stocks. I mean, I'm 25 or 30 years old. I've got decades left to go. I should be investing in high growth stocks, right? Because of course they're going to outperform dividend stocks. That couldn't be further than the truth, Chris. There's some really well-heeled studies out there that look at the returns, the long-term returns of the market, specifically at the S&P 500, and kind of isolating down to companies in the S&P 500 that have above average yields, above average dividend growth. And if you look at the upper quintiles of those studies, upper quintiles in terms of dividend yield or dividend growth, those are the best companies. Those are the companies that tend to outperform the longest and the best. I don't like tobacco stocks, but one of the greatest stocks of all time is Altria. And Altria's paid a dividend for, 90 years at this point. And so I think if you're a young investor and you're speaking to college students, dividend investing is a totally fine place to be investing. And it goes back to one of those things, and we're seeing that in the market today, which is what is performing the best so far this year, here in 2026. It's companies that are generally paying a dividend, whether they're industrial companies, energy companies, staples companies. Look what that's doing versus the technology and software companies, at least so far this year. And I think it can make a real difference in someone's portfolio if they at least have some allocation to that part of the market.
What is a charitable cause that you like to support?
So no matter where Gene and I have lived, and we're living kind of in two places right now, but mostly in Middleburg, Virginia. And so we make a pretty regular thing to donate money to the Humane Foundation in Middleburg. And we've done it elsewhere as well. I've always looked at animal charities as kind of closer to my heart. I grew up with animals. We have animals. And what I love in particular about what the Middleburg one does is it's not just dogs and cats, which is typical, but, horses, farm animals, wildlife. And I just think animals have a raw deal in this human world that we live in, right? And I see a lot of animal mistreatment. And so that we donate to several charities, including theatrical, artistic ones as well. But the one that's kind of consistent for us is usually the Humane Society.
Do you have a favorite movie or TV series that has money as a through line?
So this is going to be a strange one, but bear with me on this. So I can't really go more than 6 months, let's say, without watching There Will Be Blood, which is the famous oil baron movie, Paul Thomas Anderson and Daniel Day-Lewis, playing Daniel Plainview, and Daniel Day-Lewis, by the way, is my goat when it comes to male actors. But I think it's such a raw expression of American capitalism and just the ambition, the consequences of this special brand of capitalism that we have in the United States, that what it does to your family or who you are, the drive towards money, almost the insane drive towards money and power and free enterprise. It's not a totally movie about money. I probably should have said something like Trading Places or Wall Street, but I don't know why it was the one movie that comes to mind when I think about the question of money and capitalism and especially our American brand of capitalism. So There Will Be Blood.
Last thing is a penny for your thoughts, and this is just any bit of life wisdom that you want to share with people who are listening. It can be about money, but it doesn't have to be. It can be about anything.
Right. I got sucked in, so many people do, so many investors do, to the idea that complexity is always a superior thing. And it doesn't have to be just investing, but I'll use investing because it's easier to kind of make an example. But, you see a lot of trouble today with what's happening in the private equity, private credit markets. And I spent a long time in the late teens, 2000s of looking at kind of private real estate deals, limited partnerships, private equity in real estate, commercial real estate. And I realized, I learned a lot of lessons doing that. But what I realized is there's a lot to just keeping things simple. Having a very simple, clean investing plan, invest only in public stocks, invest in stocks that pay a dividend, boring companies. You're going to get pitched a lot of things, especially as you get more money in life, whether it's private equity, whether it's venture capital, whether it's hedge funds, all these really exotic things that just look so appealing because maybe the neighbor next door is investing in them and he's doing really well or better than you. And I would just say we can all do so much better by just keeping things simple and not as complex as we think they should be.
There you go. If you want to find more investing insights from Matt Argersinger, look him up online at fool.com. I'm Chris Hill. Thanks for listening. I'll see you next week.